Hello guys, you all welcome to another episode of our beginner class. In our today class, we are going to be talking about candlestick pattern. Okay, so what is candlestick pattern, guys? Candlestick pattern is the language of the market, in which you as a trader, you need to understand the language of the market, which is what the candlestick pattern, before you can be able to take any trade. Okay, so the market is going to be communicating to you to know whenever the market is ready to buy, or maybe whenever the market is ready to sell. So that is why it is necessary for you as a trader to understand candlestick pattern, so that you can be able to interpret the language that the market is trying to speak to you. Okay, so let us say you travel to a country and you didn't understand their language. How are you going to be able to communicate with them? Automatically, it's not going to be easy for you for you to be able to communicate with them. Okay, so as a trader, you need to understand a candlestick pattern before you can trade the financial market successfully. Okay, so I'm going to show you guys the most important candlestick that you need to know as a trader before you can be successful in the financial market. Okay, so guys, let's move into the chart and let me show you guys some important candlestick that you need to know, guys. So let's talk about candlestick pattern, guys. Okay, so let's talk about candlestick pattern. So if you need this book, just click on the link in the description below to download the book. Okay, so what is candlestick, guys? Here is a candlestick is a way of displaying information about an asset price movement. Okay, so like what we discussed in our previous class, candlestick always explain the price movement of the market. Okay, and here is a candlestick chart are one of the most popular component of technical analysis, okay, enabling traders to interpret price information quickly and from just a few price bar. Okay, so from just the bar of the market, so we can easily interpret the market. Okay, so with the bar, okay, so we can easily interpret the market if it's going to be going bullish, or maybe it's going to be going bearish. Okay, so that is what we're just trying to explain there. So let's clean this. And I said candlestick patterns. Okay, what are candlestick patterns? I said candlestick patterns are one of the most powerful trading concepts. They are simple, easy to identify, and very profitable setups. Okay, a research has confirmed that candlestick patterns have a high predictive value and can produce a positive result. Okay, so your candlestick pattern are your confirmation whenever you want to take a trade, maybe for you to sell or for you to buy. Okay, so there are some candlestick that you need to see that, okay, this is time for me to jump into the market to sell, and also this is time for me to jump into the market to buy. No, I mean, kindly note, we are not just buying based off candlestick. So we are still going to teach you later on in your next class on how to do your technical analysis, and before you can say, okay, this is when to take the market. Okay, so that is for that about the candlestick, guys. Okay, so the candlestick have three main basic features. Okay, here we have the candlestick body. Okay, you all know the candlestick body already. So the candlestick body is the body of the candle. Okay, so the full body of the candle is the candlestick body. Okay, so which represents the open and the close of the candle. Okay, so let us assume the market open here and it close here. So this is a bearish market. So if the market open here, so if the market, let us assume the market open here and close above, okay, and close here, so you can say, okay, this market is a bullish market. But if it open here and close here, this is a what? This is a bearish market. Okay, so that is for that. Then also we have the wick of the candle. Okay, so when you have a candle like this, okay, so we have the wick. From our previous class, I told you guys the wick of the candle. So it determines the high and the low, okay, which is the highest high that the market has already went to before they reject the price, and also the lowest low that the market has already go before they reject the market up. So this is what wick is. Okay, so and also we have the color. Okay, the color here I say which reveal the direction of the price movement. Okay, so a green or a white color body indicate a price increasing. Okay, so if you have a green body candle, so it tell you that, okay, the price is moving up. Okay, so it can be green, it can be white, so any color. Some people, they change the color. So why if you have a red candle, sorry, why if you have a red body, candle, it shows the market is coming down. Okay, so that is for that on on your candlestick colors. Okay, so now let's move to the most important aspect of your candlestick, okay, which is your candlestick pattern. We have many candlestick pattern there out there. So I'm going to be playing with you guys based on the experience I've had in the financial market, and also the most profitable candlestick pattern that is which always occur, and whenever you see it, maybe in an uptrend or a downtrend, you know that okay, this is what the market is about to do. Okay, so if I said uptrend, that is the market is going up, right, forming a higher high, higher low. So we're still going to talk more about that in our other class. Okay, why if the market is coming down, when this market is forming a lower low, lower high, like that. Okay, so that is for that, guys. Now we have different types of candlestick pattern. Okay, so the most important candlestick pattern that you need to know as a beginner trader, and that you need to know forever and ever if you're going to become a trader. So this is what I listed here, guys. Number one is the engulfing candlestick bar. Okay, from the word engulf, so I said it is a state of its title is formed when it fully engulfs the previous candle. Okay, so when I say engulf candlestick, let's assume you have a smaller candlestick like this, okay, and the next candlestick that open, it fully engulfs this candle. Okay, so from the word engulf, it eats this candlestick, okay, which is this previous one that occur. You see, this one is like a mother to it. Okay, this one is just like a baby. So this is what engulf candlestick pattern. So whenever you see this kind of engulfing candlestick pattern, so it indicates what a reversal, maybe in an uptrend or a downtrend. So it depends on the kind of engulf it is. So if the market, for example, now if the market is coming down, let's assume the market is coming, sorry, let me clear the chart. So let's assume the market is going up now. For example, you see the market going up in an uptrend market, and you now see an engulfing candlestick. Let us assume you have a resistance level here, or maybe any significant level you are looking to sell, and you saw an engulfing candlestick here. So what are you expecting? You're expecting the market to be coming down, okay, which is a bearish engulfing, right? If you saw a bearish engulfing candlestick, okay, so you expect the market to be coming down. So from there you can now jump in after seeing the engulfing, then you can sell from here so that you can take the market. Okay, so also if the market okay, that is what I explained here. I said the bearish engulfing, I said, is one of the most important candlestick pattern, which this candlestick pattern consists of two bodies. The first body is smaller than the second body. Okay, in other words, the second body engulfs the previous body. Okay, so I said it confirms a selling opportunity. Okay, it's confirmed a selling opportunity in an uptrend market. Okay, so if the market is going up, let us know the market is going up here, going up. So, and you saw something like this, look at the engulf, look at the way this candlestick engulf this other one, then you can jump in yourself from here and sell the market. Okay, so that is for the bearish engulf. Why for the bullish engulf, guys? So the bullish engulf, I said it consists of two bars, as you all know, engulfing. Okay, the first one is the smaller body, and the second one is the what? Is the engulfing candlestick. The bullish engulfing confirm a buying opportunity. Okay, so it always confirm a buying opportunity in the market. Let's assume the market has been coming down, literally coming down. So I have a zone here that you are looking to buy from. Okay, so in which I'm going to teach you how to determine this zone. Then you saw a bullish engulfing candlestick like this, a bullish engulfing candlestick. From there you can jump into your buy, then and ride the buy. So this is a reversal candlestick pattern, which confirms to you that okay, it's time for me to buy from here. Okay, so that is for that on the bullish engulf candlestick. Okay, so let's move to another candlestick pattern that we have. The next candlestick pattern here that we have is Doji. Okay, the Doji. So I said the Doji is one of the most important Japanese candlestick pattern. When this candlestick pattern forms, it tells us that the market opens and closes at the same price range. Okay, so which means that there is equality and indecision between the buyers and the seller. Okay, so whenever the power of the buyer and the seller is the same thing, you see a Doji candlestick. Okay, so the market will open and close at the same range. Okay, so let's look at example of it. Look at this now. This is a Doji style. Okay, so this Doji now, you can see that okay, the market literally move the market, when the market open here, this is the opening price, Abi. So the market move up to this level, then the sellers, they reject the market came down to this level, Abi. They reject the market also. That is why it is weak. Okay, so then the market close where it opened from. The same thing here, when the market open, it this way the market opened from, it came down, they reject the market up, right? Then they reject it again down, so it closed the same place. Okay, the same thing here, this way the market opened, the market literally came down, they reject the price up, then the price closed at the same area. Okay, the same thing here, this is where the market opened. Okay, so the market went up. When it went up, then they reject the market down. Then the market literally closed the same place where it opened from. Okay, so this is a Doji candlestick pattern. Okay, so whenever you see a Doji candlestick pattern in an uptrend or a downtrend, it determines a reversal. Okay, it always determines what? A reversal. Let us assume the market is coming down. It's coming down. You see this kind of a Doji star. Okay, this kind of Doji star. Okay, let us we have a support level that you're looking to buy, and you saw this kind of a Doji star there. So what it tell you down is that the market is about to buy. Then from there you can jump in the buy and enjoy the ride. Okay, so the same thing applicable here. So let us assume the market is going up, and it came to this dragonfly. Okay, so whenever you see this dragonfly in an uptrend market, so and in a key resistance level, then you can expect the market to literally reverse there and keep on coming down. Okay, the same thing happened to the same thing applicable to this gravestone. So let us the market has been coming down to this side, and let us have a support level here. Then you saw a gravestone candlestick pattern there. So a Doji gravestone, then you can literally anticipate a reversal in the market to keep on going up. Okay, so your Doji determine a reversal candlestick pattern. Okay, a reversal in the market. The next one that we have here is known as the morning star. Okay, so the morning star is considered as a bullish reversal candlestick pattern. Okay, it often occurs at the bottom of a downtrend. Okay, so let us, for example, now when the market is literally coming down. Okay, when the market is coming down, and you saw the market coming down. Okay, so and you now saw this kind of a morning star form, which is after this bearish candlestick, and you saw this bullish and also the other bullish, then it has already confirmed to you that, okay, from this your zone, let us have a zone here that you're looking to buy from. So it already confirmed for you that, okay, now you can jump into the market and buy the market. Okay, so you can literally buy your market from there and put your stop loss below the level. Okay, so that is for that on the morning star, guys. Okay, so the other one that we also have here is known as the evening star. Okay, so the evening star is just the opposite of the morning star. Okay, you know, in our morning star we are looking to buy when it forms in a downtrend, while the evening star you'll be looking to sell when it forms in an uptrend. Okay, so now let us know the market is literally going up, forming a higher low, a higher low, a higher, right? Then you now saw this evening star forming. Okay, so you now saw this bullish, saw this bearish, saw this other bearish to confirm to you. Then you can literally jump into your sell from here, put your stop loss above that level. Then the market you should expect the market coming down. Okay, so this is an evening star candlestick pattern confirmation. Okay, so let's move to another one. The other one that we have here is known as the hammer candlestick. Okay, also known as the pin bar. Okay, so your pin bar always is always used to buy. Okay, so it always shows that, okay, there is a bullish confirmation in the market. Okay, so it's time for us to jump in. Okay, so let us assume the market is coming down. The market is coming down. So I now saw this pin bar form. You see, it's kind of a bullish. Okay, so it's confirmed to us now that, okay, the bull are already in the market, so it's time for us to jump in and buy the market. Then from there you can literally buy your market from there, put your stop loss below it. Okay, so and expect the market to keep on going up. Okay, so that is for that on your pin bar. Okay, so the other candlestick pattern that we also have is known as the shooting star. Okay, so the shooting star is opposite of the pin bar. Okay, so it's just a bearish pin bar. Okay, so your shooting star, whenever your shooting star, you saw your shooting star, whenever the market is going up, forming a higher low, higher low. Okay, so let us we have a market like this that is coming up, coming up, coming up, coming up, coming up, coming up. So I now saw a formation of evening of this shooting star. Let us have a resistance level that you're looking to sell, and you now saw a formation of this shooting star there. Okay, so sometimes it's not necessarily means it must be this bullish. Sometimes it can only be this one. So if you saw it there as a confirmation, then you can literally jump into your sale and enjoy the trend of the market as the market will keep on dumping. Okay, so that is a shooting star confirmation for you guys. Okay, so the other one that we also have is known as the Harami. Okay, so they also call it a pregnant woman, okay, carrying a baby at the front. Okay, so a pregnant woman carrying a baby at the front. If you look at it, it looks like a pregnant woman. It looks like a pregnant woman here. So looking at it, this is the mother and also this is the baby at the front. Okay, this is the mother. Okay, and also this is the baby at the front. Okay, so we have different types of Harami. You have the bullish Harami and also we have the bearish Harami. Okay, so the bullish Harami now, if the market is coming down, let's say the market is coming down, and you saw the formation of this bullish Harami at the end here. Okay, so you saw the formation of a bullish Harami. So what is significant? What is signified to you is that you can buy your market. So okay, so when you saw a bullish Harami, then you can literally buy the market from there. Okay, why if the market is going up? So let us know the market is forming a high, going up, and you have a zone here that you are looking to sell from. Okay, which I'm still going to teach you how to determine all those zones. Then from here now, then you now saw you now saw a bearish Harami here. Okay, so you can literally jump into your sale and continue enjoying the sale. Then you can jump in the sale, put your stop loss above it, then and enjoy your selling opportunity. Okay, so that is for that on your Harami. Then the other one, which is also most important, is known as Tweezer. Okay, Tweezer. Okay, so we have the Tweezer top and also we have the Tweezer bottom. Okay, so guys, I can literally bet it with you. Whenever you saw this kind of confirmation, most of this Tweezer at the top or at the bottom of maybe any zone you're looking to buy or sell, enter the position, the market is going to go away. Like, let me say, nothing is 100% certain in the financial market. Let me say 80 to 90% certain. Okay, so and also all the whole pattern that I display here for you guys, like 80% like certain if you saw it in any of your zone that you're looking to buy or sell. Okay, so we have different type of Harami. You have different type of Tweezer. We have the Tweezer top, we have the Tweezer bottom. Okay, so your Tweezer bottom, you look to buy from a Tweezer bottom. Okay, so let us assume the market has literally been coming down, forming a lower low, a lower high, lower low, a lower high, lower low, a lower high. And you now saw, let us now have a zone here that you're looking to buy from. And you now saw this Tweezer formation, this Tweezer bottom formation. Then you can literally buy your market from there. After you saw this Tweezer, enter here, put your stop loss below the level, then and enjoy the trend of the market as the trend change. Okay. So also, let us assume you are looking to sell the market at this zone here, and you now saw the formation of this. And the market is coming up, and you now saw a formation of this Tweezer top. Okay, you saw this Tweezer top here, then you can literally anticipate the market to continue coming down. Okay, so what makes it to call it Tweezer? You see the candlestick, the bullish and the bearish, they close the same thing. Okay, they're almost the same thing. Okay, if you look at it, the same thing here, they're almost the same thing. That's what makes us call them Tweezer. Okay, so that is for that on Tweezer pattern, guys. So the other one that we have is known as the hanging man. Okay, so the hanging man is just like a pin bar. It's just like a bullish pin bar. Okay, so but don't forget that your pin bar will always form at the bottom of the market. Okay, so that is, if the market is coming down, you saw a pin bar. This is what you can call a pin bar. But your hanging man will always form at the top of the market. Okay, so your hanging man will always form at the top of the market, which signify what? A bearish reversal. Okay, so let us say the market is coming like this. So and you now saw a hanging man. Okay, so at the top, maybe at the level that you're looking to sell, then you can literally anticipate that okay, the market is going to be coming down. Then you can jump in the sale and put your stop loss above the level. So it can be one candlestick pattern. It doesn't necessarily that it need to be 1, 2, 3, 4. Okay, so it can be this, it can be this, it can be this, it can be this, and sometimes it can be 2 of them, sometimes it can be 3 of them. So it's still the same with hanging man. Okay, so that is for that, guys, on your candlestick chart pattern. Okay, let me give you guys a bonus tip also. There is one other candlestick pattern. We didn't write it in this book. So let us know the market is coming down. Okay, we saw a market coming down, and you now saw a kind of a bullish, okay, a kind of a bullish candle. Okay, let us know this is zone you are looking to buy actually. So you now saw a bullish candle and the half wick, okay, that they reject. Okay, but it's still closed bullishly actually. So this kind of candlestick pattern, you can still anticipate a buying opportunity from there. Okay, so I've backtested this candlestick also and it worked out. Okay, so you can literally anticipate a buying from there also. So that is for that, guys. So that is for that. And also, if the market is going up, so let us know the market is going up. Market is going up, and you now saw a bearish. Let us know you now saw a bearish candlestick. Okay, so which is still the same thing as this hanging man. So you now saw this kind of bearish candlestick there. So, and you see the tail. Okay, so it's just like an opposite of this. So you just see the tail, then you can literally anticipate the market coming down, which is the same thing as this Harami. So this is just the opposite of it. Okay, so that is it, guys. Thank you very much. So that is for that, guys. If you need the PDF to each of these courses, kindly click on the link on the description below and download the PDFs, okay? And also don't forget to subscribe to our YouTube channel, smash the like button, and share the video to any aspiring trader that are willing to learn Forex market, okay? So thank you very much. See you guys in the next slide.